Welcome to today's Morning Report on Monday the 8th of August with me, Richard Paramarket Analyst. That's Hantech Markets. We've got a pretty risk positive move starting off today. Basically the non-farm payrolls report on Friday still has a legacy in this market today, and we had a strong move higher on Friday on equity markets, and risk assets generally performed very well, and the dollar as well strengthened. So let's just show you how that has impacted events. Oh, sorry, wrong one. So we've got the dollar, which spiked higher on Friday. It's continued to remain pretty positive today, and that's sort of shown through the yields as well. Treasury yields still pulling higher, but marginally, actually trading at the lows of the day, interestingly enough. So perhaps that little immediate dollar strength could be a bit limited today, but interesting because that is reflecting, I think, also the fact that we're seeing risk positive moves through the oil price pulling higher. That oil price is rebounding. It's now testing back again the underside of that old downtrend channel, and it'll be interesting to see if that could break through the key levels that are overhead now. Big sort of crossroads, I think, oil price is coming up to now. But the dollar is the big one. I think the dollar strength that we've seen has really turned around what had been a bit of a corrective move, as the market had been a bit disappointed by the data after the FOMC decision. And non-farm payrolls on Friday has really sort of given the dollar a boost, and looks like it's going to continue for the near term. The dollar, for example, is trading positive against all the forex majors. Interestingly enough, though, the euro is holding its ground. Also, gold is corrected, so that is again another reflective move of the safe haven sort of status that the markets are betting against at the moment. So. Not only that, you've got equity markets, which initially had looked to be a little bit cautious this morning. They're starting to push on again. We had the Chinese trade data, which came out overnight, and the exports and imports data both missed expectations quite significantly on the dollar trade weighted. On the dollar trade data, I should say, and. That is the imports. Look at that imports, 12.5% decline, and big miss of expectations there. That is concerning, and I think shows continued worries, I think, over global demand that is reflected in that lack of Chinese imports. So that is going to have a knock-on impact. But for now, certainly the near-term outlook is fairly risk positive, and the markets are looking on the glass half full with the US non-farm payrolls on Friday. There is no economic data today, having had that Chinese data, so markets look fairly positive, and there's not a great deal to derail them at the moment. So let's look at my chart of the day, which is the Euro Sterling. Now, we had Euro Sterling form that big bullish engulfing pattern, or certainly bullish outside day anyway, on Thursday in the wake of the Bank of England, as the sterling weakened and the euro relatively performed well. And it's breaking higher, and it's looking to continue that breakout. This move above the 84.70 candle is interesting as well, because that sort of starts to end or starts to sort of build the momentum higher again, end of that consolidation, and we're starting to see these momentum indicators as well pushing higher. That's a bull kiss on the stochastics. The MACD lines look as though they're about to turn up, and the RSI has got further upside potential, and is currently around 60 mark, so it's looking pretty positive, I think, on this move. In terms of the near-term chart, the hourly had that consolidation on Friday above 84.60. 84.25 to 84.60 is a basis of support. It's a good basis of support. That was the 84.70 level, but certainly it seems as though that's a decent level to start looking for buying opportunities if you get a little bit of a pullback. But at the moment, 84.60 is holding, looking positive. MACD lines on the hourly just crossed higher, so we've just got a little near-term buy signal on the hourly MACD lines, and also the stochastics are rising strongly. The hourly RSI has also got further upside, only around 65. at the moment. So I think it's all looking pretty positive for further upside moves. Now to zoom out, I'll show you the next real resistance that starts to come in. You're sort of already pushing through that initial resistance, which is 84.90 area. So above 85 figure, that would be a breakout. We've not seen that breakout quite yet. That's the consolidation band at the moment. But then you're looking at the old highs back from sort of early July, around 85, 80 towards 86 figure area. And it looks as though that we're going to have a retracement back and to test those levels in due course. But at the moment, we still need to break out above 85.05. So I wish you good luck in your trading today, and I'll speak to you later.